giving us the Holy Grail, but I truly believe that the Holy Grail is patience, consistency, and discipline for trading. So when you say all this and you make the emphasis of this, I do believe that this is the Holy Grail for trading. Actually,
Do you
just
know
I
what?
w-
Do you know what, bro? I agree with you. I agree with you, and I do believe this is the holy grail of trading. But what I want everybody to understand, staying as humble as I can with this, is that this is not my concept, and I didn't make this up. And my strategy is far from the best. But I do personally believe, for me, it is the best, because if I accept that the market goes down and goes up, and all I have to do, regardless whether I get the perfect entry, stop loss placement, or whatever else, if it's going to go down to make that lower low or higher low, it will. And the point is, if I can make a little bit of money as opposed to losing a little bit of money constantly, then guess what? That's where I want to be. I don't care whether you take a 1-to-1, 1-to-2, 1-to-3, or you hit the jackpot. The point is, I just know. And over the last 2 days trading on the 1 minute time frame, I've seen in such a quick succession, because it's so easy to lose insight on what you're actually doing when it comes to trading, when you're trading for a long period of time. But I just know all my trades that were taken, the majority of them were like 1-to-2, 1-to-3, couple break even, some 1-to-1s. And then all of a sudden I took a sell and it just flew down like 1-to-10. I was just like, what? Already? But then I just realized, hold on a minute. I stopped and I thought about this and I said, hold on, I just taken 17 trades in a row. But it was the 17th trade that made me the big money. Do you understand? The rest just kept me in the game. How many times have you guys taken trades and sat in a trade moving sideways for 7 hours before it either stopped you out, went down, or took you out break even? A lot of us have. How many times have you been in a trade where the market, you just get triggered in and tanks? A lot of us have. But what do we face most of the time? Most of the time we face the market just trickling down, pulling back, or whatever else. But if we're patient enough, that doesn't mean being patient for that trade. Being patient enough to continue trading systematically in line with what we should be doing, eventually the 17th trade might be the trade that makes you the big money. And do you know how many FTMO people, members in this community that I know have passed because of one trade? Every trade they've taken up to that one trade has either been break even, a small win, or a small loss. And it was just that one trade that got them over the finish line. Patience, not for a trade. Patience for the longevity of being a trader. I'm telling you, that is it. We have to. Now, where does the emotion side come into this? Well, again, patience, waiting for those setups, and when taking a loss, accept that this trade does not the word is not a reflection on your trading abilities. It is just part of the process of taking a trade. And once you accept that, then you can learn to contain those emotions and continue moving on. Anyway, we didn't come here for an emotional psychological lesson. So let's look at the concepts and principles. When the market is in a range, it makes a high. When we just illustrated now, the market should not break the high, because technically this is where the market is failing to break. So if the market should not break the high, where should the market go?
Down.
I'm tricking you guys because you can see what's happened right now. But if the market is not breaking the high and there's wick rejections, the market should do what? Go down.
Go down.
Right. It's that simple. But if the market breaks that high or that structural key level, then technically, what is the market illustrating to us?
Full pressure.
Highs.
It should go up. Yeah, that's it. It's either going to go up, down, or sideways. It should go up. Now, what is the rules? Do we buy a higher high? No. So what are we waiting for? The market to pull back. Now, if the market pulls back to this key level, we know that the overall pressure of this market or structure of this market is now to the upside. If we start to see wick rejections at this level in the market and it's holding at this level, we can call this a higher low. We can call this a retest. We can call this a 61.8 retracement. We can call this a back pattern. We can call this whatever the flip you want. But if the market breaks above, the illustration is showing bullish pressure. Structure of the market makes higher highs and higher lows, technically, in an uptrend. If the market pulls back to a level and gives us wick rejections, where is our money best placed? For sells, because we might think there's a break back in, or because there's a small lower high here and we expect the market to make a lower low. If the market's retesting a key level after the break of the structure makes a higher high, what are we expecting the market to do next?
Pull back.
Oh, what?
Go up.
Go up. So where should we put our money? On buys. Okay, everyone knows this. Now, this is not what I'm here to teach you, but I'm just here to obviously highlight this again. If the market's going down and the market is failing to break the structural low and there's strong wick rejections at this level, indicating bullish pressure, what are we doing? Buying or selling? Buying, because that's what the market's telling us. That's what we know a range to be doing. Just like we know a lower high is to sell and a higher low is to buy. A breakout more often than not is a buy unless it breaks back in, but we don't know that until it does. And a break back out to the downside is always a sell unless it breaks back in, but we're never going to know that otherwise. So when a range, again, we're just waiting for the low to be broken to indicate that bearish pressure, looking for that pullback and that continuation. Now, when we start to understand and accept these concepts and principles, how do we approach this? Well, we need to approach this by identifying a structural bias of the market. Now, if we know the structural bias of the market, then half our job is done. Because what that simply means for us is once we identify the structure that is in line with our strategy, which is going to be two things. Does anybody know what these two things are going to be when identifying a bias? What are we looking for?
Buys or sells.
Exactly. Buys or sells. And how do we identify a buy or sell bias market? Well, we just illustrated that. The market's going to be up. We're going to see it like a 12-year-old child, or it's going to be down, and we're going to see it like a 12-year-old child. Lower lows, lower highs. That simple. What are we going to do next once we identify structure? Well, we're just going to mark our key levels. Now, what are our key levels? Well, that's what we're really going to go into details about today. We need to mark our key levels. Now, does anybody have an idea what our key levels are going to be if the market is in an uptrend?
Higher lows, higher highs.
Right, very good. That's it. Higher highs and higher lows. How many lines do you think we need on our charts if we're looking for higher highs and higher lows and we're looking for buys?
Two.
Exactly, two. If the market's going down, making lower lows, lower highs, how many lines do you think we need on our chart to look for sells?
Two.
Two. Right. Now, why? If everybody's been told to draw support resistance and institutions do that as well, and there's key levels and this and that and everything else, why would we need to do it or not do it? Well, the strategy that you're learning today is simply to identify the market's direction and sell the lower high or look for the retest of the breakout. Now, if this is not a strategy you want to trade because you're an analytical person and you want to have MAs or EAs on your charts or whatever they're called and Fibonacci retracements and psychological level, because that's all that is, you know. All these back patterns and Fibonacci retracements, they're all psychological levels. Because the majority trade them, they work. But so does a lower high and a higher low, because that's how the market moves. Now, if anybody wants an argument with that, then message me privately after, but I'm telling you now, fact. That is all it is. Harmonic patterns are all psychological patterns. But why do they work? Well, every single indicator, strategy, and whatever else works out there for one reason. Because that's how the market moves. Not because your back pattern worked or because your 50% retracement or your 61.8% retracement was the holy grail. It's just how the market moves. It's going to pull back and it's going to push and it's going to pull back and it's going to push and it's going to move sideways when it wants. So that's how I accept the market. Now, if we look at the structure of this market, I want you guys to identify what is this market doing right now?
Moving down.
It's moving down.
Very good. The market is currently moving down. Now, I want somebody to come forward and read this chart to me using annotation. So use a pen and annotate this market to me. Don't be shy, man, because I'm learning every day. So if I'm learning, then somebody needs to be learning as well.
Can give it a go.
Yeah, please do, man. So take the annotation, the pen, and then draw it in, man.
How do I do that?
Yeah. Check up the top or on your Zoom somewhere. There'll be something that says annotate. And then pick the pen and annotate. No, you don't see it? Yeah. Let's
Just
go.
now?
Yeah, man. I'll clear it, don't worry, and then draw. So from this point on to when this becomes a downtrend, please. Don't press sideways. Just use your arrow. Use the annotation to push up. You can't do it? Is it not working for anybody? Yeah, so it's working for you lot. So
I can go rocks if you want me to.
yeah, man, go ahead, please.
Oh, well, somebody's already.
Sorry,
okay.
guys, my internet is garbage. I'm sorry.
Don't worry, dude. So let's go. So don't draw, please, unless you're going to talk so we can hear it.
So do I go or?
Yeah, man.
Oh, okay. Well, what I see is a. Whoops. Okay. 1 second while I get it again. Okay. What I see is a break below this level, and I think it becomes a downtrend after this level is created because that's a lower high of the previous high here. Well, I
Okay.
didn't mark it exactly, but
No. It's fine. It's perfect. Okay. Now, I'm not saying this is the right answer, but I like the way you see the market. Can somebody else come forward? Leave these annotations on here and someone else come forward, please.
Can I try?
Please. Leave the annotations on there.
Annotate. So, what I'm seeing, I'm not sure if it's right, but it's high, high, low, 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 lower high, high, low, high, and then it's the same lower high, lower low, lower high. We can class that as low, I guess. Lower high, lower low, double top, and it's pushing, but at the moment it's not a lower low.
Very good. Leave your annotations on there. Thank you, bro. And one more person, please.
Harox, can I give it a try?
Yeah, please, ma'am.
All right, what I'm seeing from this structure is that price is moving up by creating those high highs and high lows.
Yeah, is there any chance you can
might-
draw on the screen?
Ooh, unfortunately not, man. I can't see these annotations he's talking about.
Can anybody else see the annotations?
I can go forward.
All right, we're gonna let somebody else go forward just so that we can.
Okay, cool, no problem.
Sorry, buddy. Not that I don't want to hear what you have to say. I just want to see an annotation. Yeah. So, one more person, please.
Can I go forward?
Please, yeah, man.
Well, it's simpler than that. You know, this is up, down, and you know, a level the price is reacting. So expecting to make a new high.
Okay. Now, if we were trading this on, like, let's say the weekly time frame or monthly time frame, we may look at the structure like this, right? Because if we're planning to take this trade as a buy, whether this structure is down on the 4H or daily, if we plan to take this as a buy and a stop loss below the previous high or low, technically, if this market's going to go up, what's this market going to do?
high.
It's going to make the higher high.
Make a higher high.
Now, if you're trading this on the higher time frames or you're trading this as it is, whether this be on the 1 minute time frame, the 5 minute time frame, or hourly, if I think that was Pavel, if I'm right, if Pavel sees that this as a higher low and he takes a buy, then is this wrong?
Nope.
No.
Because in theory, the market, if it's going to make a new higher high based on this uptrend that he's seeing, then technically in theory, the market will make the higher high. If it don't make it today on this trade or the next trade or on the next trade over a period of 100 trades, more often than not, guess what? If this strategy and based on structure, higher low, higher high is going to play out, then he'll hit those trades. He may be waiting a very long period of time for those trades to come through. Do you understand? But the truth is, it's not a bad trade. We're going to stick to the same theory as we're trading with this strategy. So we're going to be focusing on today's trading as a day traders, not like position traders. We're going to look at this as day traders. And we're going to identify the market like this. Now, the market structure is clearly pushing to the upside.